afternoon. I just walked in. I've not rested. And because I'm committed to this training, I'm starting immediately. I'm amazed how people stay away from acquiring knowledge. I don't know why people don't like acquiring knowledge. I just don't know why people don't like undergoing training. It amazes me. It's like seriously. In that group, we have over 120 people. And we only have 6 people here. It amazes me a lot. Like seriously. Let me show you something. With my years of experience, and I know people that are here that have been trading for a long time, they are still learning. I was with one man that I learned it. See, are you not seeing this paper? I was with one man. I know that anytime I meet this man, that man is a custodian of technical analysis. And what he gives to me are premium informations. I will make sure I listen attentively to everything he's saying. The 1 hour I spend with that man, I will get so much value that I will apply it to my trade and I'll be getting more profits. I'll be getting more profits. So when he's talking, you'll be discharging so much information in minute by minute that I'll be very attentive, opening my ears. He used to tell me that the way he studied, the way he trade, he can turn $1,000, $1,000 in a day. And somebody was talking like that, I won't want to listen to him. And it's giving the information, a premium information like that, and I will not be attentive. As he's drawing all this in paper, I'll be listening and I'll be recording his voice because I know he's discharging so much information that I want to capture everything. So if I don't have enough background of all this thing was telling me, I will just be I will just be lost. So if somebody is telling me that as he is that he can trade with $1,000 and in a day or in 2 days he can turn into $2,000 with this knowledge, and some people will now be avoiding this kind of training, and the information he was giving to me, I always tell him that this information I give it to me, they are premium informations. Say no, it's because of the kind of person I am. That I'm somebody that also like giving valuable information for free. That he would rather give me for free, because if he wants to charge me on the information and the time he's spending to teach me those things, because he know that if he use that same time to stay at home to trade, he will make more money. Just like imagine he's staying in trade at home for 2 hours, he can study an asset that can give him 50%, that can give him so much profit. So if you now want to equalize that same time he will have used to do that, and is now using it to train me, and then want to charge me the kind of money that I made for that time, he's using to give me this information for free. And will I be able to pay? And it's true. Can I sit down with it in 2 hours and charge me $200 for that information? So let us take these trainings very serious. So now let me now go to, I want to review the training we did last week, because that last week we were doing, I played a video, so I want to do a review on that video because I went to go and do more research, and I saw an information online where there are 35 powerful candlesticks patterns. It's not compulsory you know all these 35 powerful candlestick patterns. If you just know 5, if you even know 3 is enough. You just need to just identify these patterns, and you tell yourself that it is until I see this pattern before I trade. That if I don't see this pattern, I will not trade. I will not enter. If I don't see that, I will not trade. There are some people, they don't use indicators. They don't use indicators. They will just look at charts, and they will be able to make the information and be able to know how the right time to enter. So candlestick is a tool used in technical analysis to represent the price movement of a stock, commodity, or currency. Most technical analysts use this candlestick to identify potential price movement and trends in financial markets. So a candlestick pattern is formed by combining 2 or more candles. So most technical analysts use these patterns to determine their trading actions, because this candlestick pattern help predict where the price of an asset is heading in the future. So the essence of using all these candles is for you to be able to predict, to project that where is this trade going, where is this coin going in the next 1 hour, in the next 2 hours, in the next 1 day, in the next 1 week. That's the essence of doing technical analysis, so that you will not enter at the wrong time when the market is going to dump more and you get trapped. That's why it's very, very important to know all these things. It's very, very important. Very, very important. So that you don't enter trade haphazardly without the right strategy. So last week, I show us that we have two basic type of candles. Two basic type of candles. Now we have the red candle called the bearish candlesticks. The bearish candlesticks. In some traders use, I think, black for red candles, and they use white. I hope I'm right. White for green candles. But me, I love using, because even the color red shows loss, danger, danger, danger. That's why I always use red. So bearish candlesticks, the way it is formed, it has let me bring out. The red candle always open from up, from here. It always open from up. So it always, before I even talk of how it opens, generally the candles has what we call body. This is the body of the candle, just like a normal candle that we used to light at home. It has a body, and this body composes of transactions. Inside this body that you are seeing here, it shows the volume of transaction. This body of this candle is representing the total transaction in this candle, whether in 1 second, in 5 minutes, in 15 minutes, in 1 hour. So it's just representing the total transaction that happened. And when you see a candle that finally finished forming and it turns red, it means that the sellers were more in that candle. It does not mean that in this candle there are not buyers, but the people that are more in this candle that made it to nosedive, to close, is the sellers, the bears. So the red candle always open from up. They always open from up, and they also, before I even talk about open and close, they also have a wick. Candles have a wick up like this, like wick in a candle that will light, and they can also have candle and wick at the bottom. They have candles, wick or shadow. It's called wick or shadow. That line you are seeing at the up and the bottom. That's why sometimes you see a candle that will just have one long wick on top, and that long wick on top has meaning. So red candle generally open from the up, of the body, from the top of the body here. They open from here and they close here. They open from here and the class where you see red candles, they always come down like this. They always come down like this because they always open from up, they close. And that one will open from here and they will close. They open from up, and that's why you see what causes downtrend for a coin to be going down, because the sellers are the one pushing the price from up down, from up down, from up down, from up down, because of the bears. That's why you see candles in red, they always come down because they always open from up and they close at the bottom. They open from up, they close, because the bears are buying and pushing the price, selling it. So it will now increase the supply of that asset. It will increase the supply of that coin in the market. So in the candle also, we also have wick. You can see from here that this red candle opened from up at $50. but you will see a wick at the bottom. It shows that during the session of trade in this candle had the lowest price of 35. That's why you see at the tip of the wick or shadow, this at the tip here, it shows that this trade, this asset, at that section of trade in this candle had the lowest price as 35 and it had the highest price as 55. But generally speaking, it opened, that means this is the way it moved. It opened here, it might go down like this, go down like this, touch here once, make just highest price of $55 and continually moving downwards to 40 until it might come down to 35 and move back up again, but finally it now closed at $40. So that's the way red candles are formed. So when you look at the green candles always open from bottom. That's why they always tend to move up. They climb up. They form up. That's why you see green candles always going up. Green candles are always going up like this. You see them going up because they will open from here, they will close up. If another one open, the another one might open from here, open from the way the last one close and close here. If another one forms here, it opens here. And this one closed here, and the next one now opens here, it closes. That's what will be making the coin to be going up. But it does not always arrange like this. It has even patterns. So if you see a candle moving up like this, that means there is the bulls are taking over and the coin will be in an uptrend. So generally speaking, green candle always open from the bottom here, and it can go as high to the tip of the wick. Like this coin opened at $50. When this candle opened at 50, it went high to 65, or it might even come down back to 45. But at the end of the day, it might not close at 60. It might not close at 60. So that is the way red candles, and this foundational information is very, very important, so that when you look at candles, how they are opening, closing, and how they are aligned beside each other, and how they are moving. Maybe they are moving sideways, they are moving upwards, they are moving downwards, and there's a way they arrange themselves. All those things has a lot of meaning. Each candle has a language, each candle has an information, and some group of candles, the way they arrange themselves together has a lot of meaning. So trading is a whole course. It's so deep and so elaborate. So this little that I've explained, if you've understood it so far, before I move to the next, type 3 in the chat. Type 3 in the chat. If you have understood what I've said so far, type 3 in the chat. At least from what I just said here, I made us understand that green candles move open from the bottom of the candle, they close at the top of the candle, but red candles, they open from the up of the body and they close at the top, at the bottom of the body. So that's just how candles are formed. Now let's move to the next topic. Now there are different patterns that really matters, and those patterns are: number one, we have bullish candlestick patterns, because all these 35 candlestick patterns are divided into 3 different types. Number one, we have the bullish candlestick patterns, and we have the bearish candlestick patterns. We also have continuation candlestick patterns. Now, the bullish candlestick patterns are those that indicate uptrending market. These candles are primarily shown in green color, and these candles also work as reversal candles. That's why we can also call them bullish reversal patterns. So tonight I'll be talking about just 2 two bullish reversal patterns. I don't want to talk too much, so that if you just learn these two. Sorry about that, it's my son. So if you just learn just two of these patterns and you can spot them out. Sorry about that. So if you can be able to spot those patterns in any chart, you'll be able to take, you can even take as much as 10-20% if you can be able to identify that patterns, because they always form at the end of a downtrend. That's why we can also call them bullish reversal patterns. If these candles are formed in an ongoing downtrend, they're always seen at the bottom of a downtrend. Let me explain what that means. That's why I say patterns and trends. Patterns and trends are your friend. Are the indicators, are the thing that can help you to know the right time to enter any trade. The moment you can identify those patterns. What they are saying is that bullish candlestick patterns are found when there is a downtrend. At the bottom of a downtrend, let's say there is a downtrend like this, candles coming down, coming down, coming down, forming down, forming down, forming down like this. So at the bottom of this last red candle, when you now start seeing some patterns, maybe green candle, some types of group of green candles started forming at the end of this downtrend of red candles, you can be able to identify them at the bottom here. So there are different types of bullish candlestick patterns there. They are called bullish reversal patterns. It means that the sellers are already tired. They have already oversold. So when you now spot that bullish reversal pattern, that means the market, the trend is about to reverse, to take a to identify those patterns here. There are several of those patterns. You don't need to learn all. The moment you can be able to understand few, then you know that this coin is about to reverse up, and we're going to identify them on the chart. Then it can give you as high as 5-10%, even without even using RSI, MACD, all those ones will just now confirm what you just saw on those charts. There are people that they don't use indicators. Some people say they are not fan of indicators because they are so used to candlestick formation, patterns, drawing trend lines, identifying support and resistance. That's all they need. I know people, they don't use it. They don't draw themselves. They will draw support and they will identify where it is. They will draw the demand zone. They will identify the demand zone, the supply zone, and they are good to go. And those people that use those candlestick patterns to trade, they are professionals. They know the meaning of each candle formation. It has a meaning. So bullish candlestick pattern is formed at the bottom. Why? So traders should be cautious about their selling positions when a bullish reversal pattern appears. That's why you should not always sell without knowledge of how the pattern are. So some people will not get at this point when the candles, when they have been trading floating low for a very long time. It has happened time after time. So sometimes I used to say jokingly that it is village people. It's not village people, it's ignorance. It is not village people, it is ignorance. Because time after time, after you now emotionally sell off your trade, second day, the company started pumping up. And you now be regretting, why did I sell? But if you are able to understand these patterns, you will not sell emotionally because the coins are down. You not sell if you are armed with this information. So now we also have what we call bearish candlestick patterns. Bearish candlestick patterns are those that indicate downtrend market. These candles are primarily shown in red color. This candle also work as a reversal. That's why we can call them bearish reversal patterns. If these candles are formed in an ongoing uptrend, the trend will change from down to up. Okay, I think I'm mixing something up here. Okay, no worry. I will give us some examples of those candles so that we can be able to understand it very well. If these candles are formed in an ongoing uptrend, okay. The trend, okay, I understand. And I know if these candles are formed in an ongoing up, this is what they mean. Because the last one I draw now is from down up. You can see what I do. So what they are saying here is that when there is an uptrend, when there's an uptrend like this, when candles are going up, they will not get to a point where a red candle will start forming like this here. So you must be able to identify this bearish reversal because these candles have been forming up. You know, there is some group of people, they say they like trading coin, they call it TGA. You see TGS trading strategy. They always try, they always trade coins that are up at the 5 minutes time frame. Me, I will not do it because if the market suddenly reverse, your dumping and dipping will be so high. So we need to learn that when the coin is going up and you want to take profit, a point in time when a bearish reversal pattern will form to start coming down. So you must be able to identify them to know when you're supposed to exit that trade. Exit so that you not get trapped. So that all the profits you have gotten from here up, you will not get trapped. It will not start coming down. So you must be able to identify those patterns. So that's what they call bearish candlestick patterns. And another pattern called continuation candlestick patterns. Continuation candlestick pattern continue the ongoing trend. For example, if an uptrend is going on and the candlestick patterns appear, they will continue the uptrend. That's amazing. If an uptrend is going on and this candlestick patterns appear, they will continue the uptrend. That means this is what it means. And when there is an uptrend, so that that's why we always miss out on profits. Green candles are forming. Green candles are forming. You must think that this they have already gone far. They will start going down. But if there's a pattern that form around here, then that pattern means that there might be a continuation of that uptrend to continue moving up, so that you not leave too early to take profits. You can see how important this tuning is. Very important. So there are always continuation or even downtrend, as we just explained, continuation of uptrend or going uptrend. There can also be some pattern that we see in a downtrend. That's why I was trapped in one coin, BNX. So I'm still learning. Sorry. You can enter a coin and the coin might be in a downtrend, and we think that, okay, from the training, they say that when the coin has gone down, the trade has gone down, that you enter from here. So there are some patterns you must see here before you should know it's the right time to enter, or else the coin might be dumping more, and it might be get trapped. That's why I got trapped in a coin. Let me show you all that coin. You can see that how important the training is. I entered that coin. The coin I entered at the right time. I think I have entered. If I have understood these patterns, I would have entered and get stuck in this trade. See this trade. This trade is down by minus 42%. When I went to go and check that trade at the 4-hour chart, you will see how the coin has been moving so much down. Now let me look for a higher time frame. Let me look for like 6 hours. I entered this coin around, I think around here. think around here. Let me check the price and enter this one. As well, the knowledge of all these patterns is very, very important. I entered, that's why I just left the coin there. I entered on 20th of September, 20th of September, when the coin was 1.3578. The coin don't dump so much. So I enter around this place, around here. So in that time, just be checking, the coin has been going down. It has been going down, going down, going down, going down, going down, going down. For it to even come up now, it requires a lot of bulls to come to this coin. So I'm trapped in this coin now. You can see that myself that I'm teaching us, I'm still learning. That's why when I got this experience on this trade, I told myself that anytime I see this kind of sloppy, when the candles are so sloppy too much, I know they enter again. That's what I learned from this trade. Anytime I think I enter around here. So I didn't know that this coin will still be going down more and more and more and more and more down. So if we can be able to know the pattern that will show, or whether in an ongoing uptrend or a downtrend, when we spot all those patterns, we will not enter it so that we will not get trapped. So that we will not get trapped. So how to trade with candlestick patterns? Candlestick patterns are used for entry and exits. Are you hearing me? Candlestick patterns, all these patterns we want to learn today, are used for entry and exit. Entry and exit. The moment you can able to spot these patterns, you know whether to enter or not to enter, or where to exit. The moment you spot these patterns. But the essential thing why trading with candlestick is the market trend, support or resistance. All these factors matter while trading on candlestick patterns. So the market trend matters. Checking the support and resistance matters. So if you have not been in my training where I was talking about support and resistance, support generally means the bottom price of a trade or on a chart, and resistance is the highest price a coin reach where the price was resistant and is about to come down. I've done that in the past on my YouTube channel. So suppose if you want to take a trade on a bullish engulfing candlestick, which is established near the resistance level or at the top, it's probably about to fail and your stop loss will get it. But if there's a bearish engulfing candlestick pattern and you enter, then you get your target and trade will be the win. So let me just go straight so that I will not bore us with So I will just go to the first pattern. The first pattern, and the first pattern is bullish engulfing. I'm coming. It's called, the first pattern is called the bullish engulfing pattern, which forms when a green candle completely engulfs a bearish candle. More clearly, in this pattern, green candle, bullish candle, completely covers the red candle, bearish candle. Mostly bullish engulfing candlestick pattern don't have wicks, but sometimes a little wick is okay. No wick or little wick indicates the power of the bulls. So no wick or little wick, you can see that when a candle does not have a wick, it shows that the candle is strong, whether it is red. When the candle, so any candle that you see that has long wick like this, up or down, it's okay. They are not strong candles. So if you have a red candle that does not have a wick or very tiny wick up or down, it's a very strong candle. Or if it's the other way around, it's a green candle. That's what they are saying. It's a green candle. If that green candle does not have a wick or a very tiny one, it means that that candle is thick, is rigid, is loaded with bulls. So that means when you spot a candle that does not have a wick like this. That means even the word weak makes the candle to be weak. So if you don't see a green candle that does not have a what? A weak, that means a strong candle. So bullish engulfing candles work smoothly in a downtrend. On this candle, trader can enter for buy position. So let's look at an example of that. What they are saying is this: that when you see a pattern, this bullish engulfing candlestick pattern are always seen at the end of a downtrend. Let me come in. I want to clear that this is what they mean. That when there's a downtrend, a downtrend, a downtrend, and even in the last video we played last week, I was able to learn that when there's a downtrend and the candle, let's say the candle, let me clear this. Let's say the candle was big before, the red candle was big, another one formed like this. If the red candles are beginning to reduce in size, reduce in size, reduce in size, it shows that the sellers are getting tired. They mounted so much pressure from it. That's why the candle was big. When the candles big, it started getting smaller, smaller, smaller. It means they are already getting tired. That one alone is a pattern that has an indicator that the sellers are already overselling. They are already getting tired. Then the boost will come in. So they are not saying that if the last red candle, that's where the bullish engulfing candle pattern comes in to signify a buying position. When you now see a bullish engulfing candle, that means the candle will form beside this last red candle and it will engulf it. I mean, it will be bigger or even taller than it, and it engulfed. You know, the size of this candle red is small. It can enter this green candle. That means it's engulfing. Oh, bumole. Sorry for people that don't understand Yoruba. Oh, bumole is overshadowing it. It's bigger and taller than this one. This kind of pattern is a bullish engulfing reversal pattern. And we can let's look at an example here. Are you seeing it? So as we all know, as I said earlier before, that when you see this kind of pattern, this kind of pattern is called bullish engulfing candle forms, because it shows that when this last red candle here, it opened here, where they open and they close really matters. The red candle open, the last candle open, the last red candle at the end of the downtrend opens up, it now closed down. And the green candle that formed beside it open lower than where this one closed. No, this one closed here. Let's say this one closed at 30. And the green candle now open lower than when this one closed. But when it started forming up, it went higher than where this one opened. It don't win with that. And went up and it's bigger than this red candle. It shows that this is a bullish engulfing candle. It's bigger, it's thicker. Then it's a sign that you can enter this con with your old chest. Am I clear? If you understand what I just said now, before I will now look for an example, just type 2 in the chat. So I don't want to rush. Because me too, before I could understood this training, it took me a while to understand it. So I don't want to rush. Even if possible, I might even stop on one pattern. We'll go and look for it. Even if it will take us or every week to be learning one is better. So that you learn one, I will not do two self. I will do only one. Then by next week again, we'll do another one. So if you understood what I just said, just type 2 in the chat. If you understood what I've been explaining so far, type 2. I need one more confirmation so that I can continue. That means the rest we didn't understand. If you didn't type, that means you don't understand what I've been saying. So let's go and look at an example here. You can see an example here. Because when this pattern shows, it always triggers a massive uptrend, as you can see in this picture. As you can see in this picture, this was a downtrend here. This was a downtrend. The tree was going down, going down, going down, going down, going down. When they now got here, we now discover that there is a red candle here, the last candle from this downtrend. Then a candle now formed that was taller than it. That tall candle is a bullish engulfing pattern. These two, this small red candle and this green candle, the two of this is called a bullish engulfing reversal pattern. That's why you now see that the coin started moving, because it showed that the bulls are taking over from here. They will, no matter what, the red can be coming, because the momentum they used to enter here, they will push it up. That was what made this coin to this trade to be on uptrend. I not see where it go land. It went high to this place because that bullish engulfing candle overshadowed the last red candle. As the above chart image shows, the ongoing trend was a downtrend and a bullish engulfing pattern appeared, and then the trend changed from down to up. So let me just go to RoyalQ. Let us go and look for that kind of bullish engulfing pattern. So let me just go here. Let me look for a coin. Okay, let me just look for a coin that has even pumped. Whether we can identify such. This trade was this one was ranging. It's not here. This one is just a small one. This not. I'm looking for one that's, because here you can see an example here. This one example is not it. It's not it. This is ranging. This ranging. We'll look for. It's always at the end of a downtrend. It's always at the end of a downtrend. It looks like it, but not really like it. It looks like it, but not really like it. It's not really like it. Like this place here. This downtrend was just small from here to here. The candle that was here, this candle here, you can see that it's bigger than this red candle. Then another green candle now form open from, this red candle open from here, it closed here. And the green candle that came after it was, this is not a bullish engulfing, because it has wick up, wick down. It's not a bullish engulfing. But the candle that followed after it was bullish enough. But even this one alone is enough, because this green candle was bigger than this one. Not big enough, but it set up the base for this uptrend to now start. It's not a perfect example. Let me look for a perfect example of a downtrend. And this one, not really, no. It's an example is also here. Here, you saw that this coin came from head down to this last red candle. So this is a bullish engulfing. This one is a bullish engulfing. A bullish engulfing, and it made this coin to now go sharply up here. And so it's not really a bullish engulfing, because this second candle up here has a wick. So this candle is not strong enough. Let me look for another one. I think this one. This one here. It looks like it's a bullish engulfing, but the candle is not strong enough, but it has wick, but it's still bullish engulf because it engulfs. You can see that this coin was coming down from here. I'm coming. It was coming here. It was coming from here. This is a downtrend. From here to here, it's a downtrend. From here to here, to this last red candle here is a downtrend. So the moment a green candle formed and it was bigger than this red candle, so this was called bullish engulfing. Bullish engulfing, and it moved the trade to go up slightly. It came down, but let us look at the continuation. And from there, it started going up. It just went up small from here. So if you see this kind of candle, from here to here, you'll be able to take from here. If you enter from here to here, from here to here can maybe give you, since it's 4 hours, it can give you like 3 to 4%. When you enter, so anytime I see this kind of pattern, I will put more money knowing that the candle will move up fast and give more profit. So let's look at 1 hour. Let me see if I can see it in 1 hour when this candle was, this coin was pumping. But most times these candles are recommended to be seen on 4 hours or 1 hour. Yes, it's here. A very good example is here. We are seeing it. It's a good example, but these candles are ranging from here. It's ranging. That means they are moving sideways. But at least we're able to spot because it was the range started after the downtrend here. After this downtrend here, it moved up. They started ranging sideways here, but we are able to even spot it. So that means it's not only in a downtrend we were able to spot it. We can see it here. It showed here. I'm coming. It showed here on 1 hour. This is a red candle here, and this next green candle is engulfed. It's a bullish engulfing candle because it engulfs this red candle before it. That was what made the coin. I don't see the way the coin pump from. If you're able to identify this bullish candle because it engulfed this red one, then the coin pumped up, and it can be able to take like 3 to 4% from here and get out from the trade. I hope my explanation was clear. If my explanation was clear, please type 4 in the chat. Type 4 in the chat. Type 4. I don't want to enter into too many patterns today. Type 4. Type 4 in the chat. So I will stop here today because too much information, you will not be able to get it again. So any question, then we can stop here tonight and I can go and do the projection of the week. Any question that you like to ask, can ask your question. We'll stop there today. I've recorded it so you can go and watch it back so that you can get more understanding. Any question? If you have any question, unmute your mic and I can answer as best as I can. Any question? Okay, you can watch it again. I'm recording it. Okay, if there's no question, that means we have understood what I've said so far tonight. It's quite a pity that out of...
Good evening, sir.
Hello, good evening.
Please, I quickly want to ask a question.
Go ahead.
After the bearish, when the candle is on the downward trend, and the green candle is about to form from the downward trend, is about to form, are we supposed to wait for the green candle to be engulfed before we join it, before they enter the trade?
That's a very good question. I have different strategies of ending trade, but to just respond to this your question, you need to spot that the candle after that last red candle on the downward trend or on the sideways trend is engulfing the last red candle. After it has finished forming, then there's possibility that the next candle will be moving up. So you just need to enter the coin because it's a bullish engulfing reversal pattern. So you need to just enter straight because it will be an up. Just enter and leave the trade. Let the trade do what it's supposed to do because the bulls have taken over. That's why it was engulfing. It engulfed Ogbemi. It swallowed that last red candle. So it's a sign that the market will be uptrend. So let it form finish. Even when at the moment you enter and you see it, you just rush in. You will rush in.
Okay. Another question. I want to be very clear. How do you know that, okay, this particular trade is going to give 3%, 4%? No. I really want to understand that better.
When you want to learn that one, I don't use a RoyalQ because RoyalQ does not have tools to measure price range. I only use TradingView to do that. I use TradingView to do that. I don't use, even I can't use it. Most of the charts, even chart on Binance does not have this tool. So I always come here to measure the range because it has a tool. Let me look at a coin. Okay, let me look at this FTN. For our like this trade now. I'm expecting this coin to come down to this place. It's coming down here. So if I want to even measure, that's why you saw that the trade that we entered this evening, I said that trade can go down by -7 because I went to go and check the last price action of that coin, the previous closest last price the candle formed, and where it is to measure. Like now, if I want to measure the gap of how low can this coin come down from here to here, this gap, what will I do? I'll just click on plus sign. I'll click drawings. I'll click price range. You'll be seeing price range here, this price range. I will click it and it's already here. This is it. It's here. This blue line you are seeing, this blue line that cross in the middle here. I will now put my hand on that middle here. I will bring it here. I will now bring it on the last line, the line that is dotted on this last red candle. That's the current price. I will put it there. I will drag it down. So this coin can still go down by -5.6%. This by -5.6%. So if I want to know the profit this coin can do, let's say I go and check on the 1 hour. On the 1 hour, this coin would let me go and check the 30 minutes of this coin. Now, like this coin now, you discover that I think I've seen another pattern here. I can enter this coin because this coin is on a downtrend and it has broken the last Boligan line. And if I go and check the previous price, this coin, this is a good coin, yo. This is so big. How do I measure? If I want to use 30 minutes, because the higher time frame you use, the more profit you will make. Lower time frames is lower profit. This 30 minutes time frame. So TradingView is very, very good tool for me. I can easily switch here, slide here, measure. I can't do that on RoyalQ. I can't do it on Binance. So I'll just drag this up to 1 hour. So if I want to calculate the profit, I can. Because since this coin has come down from this up to this down, so this coin has a tendency of going back up. So you can decide that I want to wait for this coin to go back for when it came down, or just take a little profit and leave because the market can still go down. So if I want to measure that take profits, just be observant. You discover that this last green candle is a good confirmation. It's a confirmation. I like entering this kind of trade. This green candle here. Normally, the normal standard to enter this trade is the normal standard way of entering this trade is that you're supposed to wait for another green candle to form here. That is that on this one, we never know where it go because it's in the next this 1 hour chart. Okay, this last candle here, that's the beauty of trading view. It still needs 48 minutes. 48 minutes for this current green candle to finish forming. So there's possibility that the BS in this last green candle, they need the next 48 minutes to know whether this candle will still grow up to reach this last red candle. If it reaches that last candle and go higher up, you still need 48 minutes. But how will I know whether there's a tendency of it going up more? I'll go to the lower time frame again, 30 minutes. So the lower time frame is already telling me that in the next 18 minutes, that green candle has tendency of going on. Why? Because I've gone to check this place at the bottom. The RSI is pointing up. So there's tendency of this coin in the 1 hour. That candle in the 1 hour, that last candle has tendency of finishing forming to overshadow the last red candle. If I go to the 15 minutes again, because the lower time frame powers the 15 minutes will tell you what 30 minutes will give you. We tell you what 30 minutes will give what 1 hour will give you. 1 hour will give what 4 hours will give you. These are the techniques I used to enter trading. You can see that in 15 minutes, we already identify this is a perfect example of bullish engulfing. Thank you. It's a perfect example of a bullish engulfing. At the end of this, thank you for asking that question, because it made me to identify what I need to teach us in today's training. You can see that this was a downward trend. I'm coming, please. This is a downward trend from here down. So we are able to spot a bullish engulfing candle. This last green candle is engulfing the red candle at the 15 minutes. So there's tendency of this coin going on because the buyers are very active at the lower time frame. They are going to put this coin up. So the place where you are going to get more of your profit is on 4 hour. But let us use here. So for if I want to measure my candle, my take profits, I will put my my origin to here. I will put it on. This green candle has a dotted line. That's the current price. So I will just tap it like that. I will now drop. So this coin can go to this place, to that the last previous green candle. It can do 2.8. It can do as high. This is where it's still going to 6%. But I don't want to be greedy. I can say, let me take 2. That's why you see me, I will put 2.83%. I just want you to take what you're supposed to take before the coin reverse and get out. There's tendency for this coin to get as high as up here, 6%. So that's the tool I use to measure. Hey, this is a good trade though. Yeah. This coin will do up to 5% profits. I've seen the bullish engulfing candle at 15 minutes. I hope we are listening to me. Hello, are we there?
Yes. Oh yes.
You can see people that didn't attend this training see what they are missing. You see what they are missing. You see the techniques of. You see a lot of them have explained the time frame. What I saw some. I've seen 3 confirmation. I've seen confirmation on the RSI. I've seen confirmation on the Bollinger Band. The last Bollinger Band, the candles are broken that last line at the Bollinger Band. And I saw a bullish engulfing candle at 15 minutes. I saw a green candle, last green candle at 15 minutes, 30 minutes, 1 hour. That one alone is enough for me to enter this trade with my full chest. Although on 4 hour, the coin is still going to go down more. So if I want to get out from the trade faster, I can just take 3%, 2% and get out. But if I can be patient enough, the coin will still retrace more down. But it will still journey back up to 6%. I've seen it. So I've seen 3 confirmation. RSI is low, is oversold. I've seen a bullish engulfing candle at 15-minute time frame, and I've seen a downward trend, 3rd confirmation, and the last red candle has broken the last Bollinger line. I can take 10% from this coin. I've seen 4 confirmations. These are the dynamics of what I check, because I've seen 3 confirmation in 3 time frame. My favorite is 4 hour, but 4 hours have not given me the perfect what I need to see. Normally, I like going to the 1 day. That in the 1 day, is this going to be on the oversold region? But on the 1 day, it shows that this coin is going to go down. That's why I can't afford to stay long in this trade. Because from here, you can see the pattern I'm seeing here. The RSI here is pointing down. So I can't afford to stay long. So don't focus on the lower time frame too much. Go and check the higher time frame. Because at the higher time frame on the 1 day, this coin has been on the uptrend. It has formed on the 1 day, it has formed a bearish. I've not gone there, I've not taught us, but I've seen it here. It has formed a bearish engulfing candle. This coin, they come down in 1 day ahead. So normally I don't like trading this kind of coin when I see this thing on the 1 day. So it's a risk for me, because I've seen the price action in the lower time frame. I can't afford to be greedy. I will just take 2%, 2.5. I will make sure I put more first buying amount, take what I'm supposed to take, get out, because day ahead, this coin is dumping. Please, I think I've spoken enough today. I hope we have gotten value today.
Oh, yes.
I've given so much information. I'm too fast.
Another question.
Were you clear in what I've said?
Yes.
You can watch the record. Another question.
Another question is the RSI. There is a 3-line pattern: the yellow, the purple, then another one color, maybe. So which of the RSI line do you normally follow? Is it the purple or the yellow? So I'm a bit confused there.
It's not the color that matters. It's the figure beside that RSI that matters. Hello? Are you hearing me?
Okay.
It's not the color that matters. We have RSI 6, RSI 12, RSI 14. I've done that training on my previous training on when I thought about RSI. The RSI 6 is measuring the formation of 6 candles and is the fastest. It gives you the fastest indicator, fastest figure. So you can use any one of them. Or I always use the first one, RSI 6. It's always give you the immediate and the lowest value. The other ones give you a slightly higher value. So just pick one, then use it to enter your trade. But don't enter trade now, please. You're not ripe enough to enter trade. I saw one guy in the group say he has watched my video and wants to be independent. Waiting, you know, for trading. After you watch me, say where they teach us. I'm still learning. I'm still a learner. And you watch my video and you want to start trading by yourself. You've not known enough. It's too early to trade by yourself. I'm still sending you signal. Be enjoying the signal. If I don't send signal, that's the reason why I'm not sending signal. I've not seen what I need to see to send the signal. Don't be agitated to enter trade. Please. A lot of people have done that and they have got the same stocked. Don't be agitated. I want to learn. I want to be on my own. Be learning first. We spent 4 years in school before we graduate. I want to learn something that you are putting your money. You want to be in a hurry. Don't be in a hurry. Learn first. Me, I'm still learning as I am still learning. Mr. Sunday wants to ask a question.
No, I don't have question.
Because your mic is on.
I don't have question.
Please, your trade, though, what did they happen to your trade? The people like say don't get stuck, though. I'm not seeing any transaction on my back end, though.
The last profit I made was on 4th of this month.
Oh, wow.
4th of this month.
Which trade are you into now?
I see that QKC now. I think I'm in two trade. QKC and let me check. QKC.
Don't think about that.
The thing never go up now. We see it.
Please send me that your trade on WhatsApp. Send me those two your trade on your WhatsApp. Me, I want you to be making money. Because if you don't make money, how will RoyalQ pay me reward? I'm happy when you are making money. When you are making money, RoyalQ will be rewarding me more. So it is my duty to make you to make more money, so that I will get more reward.
Okay.
So I don't want people to be when you are working behind me, you are enter trade by yourself, and you get so they pay me. If they pay you, if they pay me too, because I will not get reward from RoyalQ.
Okay. I'll send two of them to you. I mean, BLZ and KKC.
Send them to me on WhatsApp. I will analyze that too for you. Because time has gone. I analyze that one now.
Okay.
So for some that are refusing to bring people in, you can see that I have one of my students that I got his dog. But this is where I'm getting something daily. As my team member, I'm making money in their trade. RoyalQ is giving me reward daily. This one is paying my bills. When other trades, my other trade is stopped. This other part of RoyalQ, some of us have refused. Some of us have put sellotape on our mouth. I will never tell anybody about RoyalQ. You think that the airdrop group I created is for just airdrop? I'm using it because I discovered that in the prospect group of RoyalQ, that group is so silent. I created that airdrop group to attract people to my business, to my RoyalQ, to bring them in. And you see that once in a while, I'll just drop RoyalQ there. Once in a while, I'm using to attract them to come and join my RoyalQ business. I'm doing my business actively. That's why I'm doing that airdrop. That's my strategy of doing the airdrop. It's not because I want to be doing airdrop. Because airdrop is so tasking for me. I have to be doing it to bring people to my business. So if you are here, you have done RoyalQ for 1 year and for 1 month, 2 months, 3 months, you are still refusing to tell people about. I don't understand. Is it RoyalQ? Is it a secret cult opportunity that I don't want to tell people? I have one of my friends in US, Fumi. Our money is in our Binance. See, both of me and that lady, we don't do business in the past. She lost money, but in RoyalQ, our money is here. See, because I'm the one opening our account. See our money.
Okay.
See,
okay, you are the one. You are the one doing the trading for him, I mean, for her.
Because she can't open Binance in US.
Okay.
So I help people from here, because if I don't come and tell me I should help people, I don't help people to trade. Though somebody even talk to one of my team members, pass you do trade. If you have $3,000, I'll help you to trade, because I know that you'll be making more profit and RoyalQ will give you raw. But if you have $100, $200, don't go and talk to me. I will teach you to trade by yourself. If you have $10,000, I will trade for you, because I know that I will make sure I give you good trade to make more money and to get reward from RoyalQ, because RoyalQ is rewarding me for my work. It's not a business of put money and cross your leg. You must work for you to get results and for you to be rewarded. So don't let us keep on keeping RoyalQ to our please. So our next meeting for prospect is I want to be doing it maybe either Wednesdays or Fridays. So I will notify also that you can invite your prospects. I did it last week Friday, and a lot of people joined, and a lot of people are eager to join. So send your prospect to join and do RoyalQ. So I think we have really spent time tonight. We need to close if there's no other question. So a lovely week ahead, and I wish this week will be bullish for us. So thank you for those that attended today, and have a lovely night. Good night.